All right, people, welcome to another Forex Friday.
Woo!
Let's jump straight into it. I'm going to hopefully go through this a little bit faster than normal. Got some shit to do today.
Totally.
But we're going to start off, per usual, with the DXY. So the dollar has retraced pretty significantly from the high at 114, almost 115. We're all the way back down at 110, 111. And so I have kind of a theme that you'll see today. Every once in a while, I like to explore just different ideas for trading just because some people don't like certain strategies, whatever it is. So this time I'm focusing more on like these stops, basically liquidity grabs, like stop loss grabs, and that has to do with buy side and sell side liquidity. And it basically just means where the stops are resting. So a lot of times you see price pretty much gravitate to where the liquidity is. You go up this way, just bust beyond wherever a lot of these retail stops might be, and then price goes right back down to where it was before. And you'll probably see better examples of it because this is kind of in the middle of it. You don't necessarily know if this is going to play out this way, but that's going to be the general theme of what's happening.
My man.
All right, so as you can see, we have had this retracement, like I said, and we just busted through this sell side liquidity, basically into this area of demand. And now we're pushing a little bit higher. So the levels I'm watching right now, assuming this short-term, medium-term momentum continues, is this right here, basically what this arrow is. So I would like to see the DXY push a little bit higher just to grab liquidity from this area right here. Maybe fill some of this imbalance, possibly get all the way back down or back up to the midpoint, and then continue its trend, possibly lower. I still think until the Fed changes its tune, and we got pretty much all these other central banks, besides the Federal Reserve, almost pivoting, not really, but doing easing policies or getting close to it. In some cases, like Japan, just outright easing for this whole entire time. So while we are seeing this retracement, until that changes, that like larger or the macro trend, I don't think the dollar is going to go that much lower or be in an extended downtrend. I mean, you could say that the dollar has just been overbought, and this is a natural retracement from an overbought dollar. But again, until those major macro secular trends change, I don't really think we're going to see this be the actual top, or at least see a continuation, long term of this dollar downtrend. All right, so with that in mind, I talked about this level right here as potential reversal anywhere in this region. Basically, try to fill some of this imbalance, grab any liquidity, run stops, etc., and then push back down, hopefully to target this sell side liquidity, fill some of this imbalance. But higher time frame, I do want to see this level, and I would probably be interested in just seeing like a little bit of a dip. And then a continuation, maybe to a higher low, or sorry, a lower high. So say this ends up being the high, then we come all the way back in here and keep that downward trend going. Or this ends up being the local bottom and we start continuing higher, making higher lows, higher highs, until eventually attacking one of these areas of buy side liquidity, or even just moving up into higher time frame supply where this original peak was. So that is the gist of the DXY. Let's keep the ball rolling. Next up, we got AUD USD, so Aussie dollar. So we are actually seeing a retracement of the Aussie dollar despite the DXY kind of. I guess we've had this, medium-term rebound, so that could be partly related to this. Although again, DXY is largely the euro, so I wouldn't necessarily look to these as a perfect correlate or anything like that.
Right.
But I have, as you can see, I have some orders here as general ideas, not anything input. I don't believe. I'll have to double check that.
You're a fucking idiot.
But these are general ideas, so I'll just talk through some of them. So we had this retracement, and we already broke through this like kind of lower time frame sell side liquidity. I don't generally view these with that much conviction just because they're such a lower time frame based off of a single wick. So this idea, clearly isn't working out exactly like like a little dip. And again, that's usually because the lower time frame ones are less reliable. It's pretty easy for a price to retrace past those. But this level right here, I'm definitely eyeing this order specifically. So I would like to see price basically bust right below these, maybe fill any of these imbalances, possibly get down all the way into this area of demand that led to this impulse and created that imbalance. But I have just found throughout my trading that a lot of times you don't see price actually get down into the demand zone. It's maybe because of people front running, or who knows, maybe it's just because once you bust through these lines, that like liquidity side, in this case sell side liquidity line, then you just immediately get or you hit all those orders and just go right back or make a reversal. And the idea would be that, institutions, large players, the big players in the market that really move price, they need people to sell to them, to buy to them, without for them not to move the market too much.
Not crazy.
Because if they just put all their orders in and there's no large group of people selling or buying, selling to them or buying from them, then they can kind of drive up price one way or the other, and or drive price up or down. So it's not ideal for them. This is why you'll see a lot of these reversals. They'll basically run all these stops so they get all the retail longs selling to them because they need that liquidity, and then they can put in their buy orders to push it back up, maybe to the buy side liquidity side. So that is the general idea of what I'd be looking for here. I like this area a lot. Anywhere in this region, I could see price dipping and then continuing up. Even if it's still part of the downtrend, it would potentially go to maybe like this area, buy side liquidity, just run stops, or into this slightly higher time frame demand or supply zone. But yeah, those are basically the areas I'd be looking out for. And then if it did end up getting all the way up to I guess a new high, possibly busting this buy side liquidity. I mean, there's a lot here. I mean, this whole general area, I would love to see that. And this would be similar to a deviation play, I guess. You just bust above it and then you head lower. So it's basically just getting all those retail shorts out of the market and then going down, which ends up fucking them, right? That's how retail works. You get your stop busted and then immediately it goes the direction you were planning on it. And, that's just it's the unfortunate reality of a retail trader.
And we say bye-bye.
All right, let's keep the ball rolling. Like I said, trying to get through this a little bit faster today. Okay, so Euro USD. Now we have seen a bit of a retracement in the Euro, but actually if I get to the daily chart, you can tell it's not really anything special. When you're so focused on the shorter time frames, it may seem like, oh, we're starting to rally, but this is pretty normal price action, especially if we go down to the lower time frame again. We see the Euro traded into this higher time frame supply zone, right? So we made a high, a low, a high, a low, and now we traded up into this area of supply pretty perfectly. As you can see, just went right into it, and then a pretty strong reaction down. Now, I am interested in price coming back for one more test of this zone. So basically this order right here, this being the point of invalidation for a new higher high, because if we're continuing this bearish structure of lower highs, lower lows, then it's presumably not going to trade beyond this point and bust that buy side liquidity, because there will be plenty of orders left in here trying to sell. So I would like that. Also, potentially just bust this buy side liquidity, right? So push up into that area supply again, but at the same time, grabbing any liquidity from retail shorts that are right here and then continuing lower. I think that's totally in the cards. Either way, it doesn't really matter that much. I mean, if you wanted to, you could push your entry a little bit higher to play that buy side liquidity play consistent with this higher time frame supply. But it doesn't really matter. This was, I guess, both the safer bet in terms of securing the entry, because making a lower high, showing that there is a lot of liquidity, definitely possible. It doesn't actually bust this level. To each your own, whatever works for you. But then if you do play that short, because you're assuming that this is a bearish structure that's going to continue, I would either target where this take profit is, this area of sell side liquidity, or just target a new lower low, because that is, again, the presumption if you are continuing the structure. But who knows? If we are going to be making higher highs, there's a good chance it is off of somewhere in this area right here from leftover orders demand to push it higher. But yeah, so summary, I'd be looking for price to re-enter this higher time frame supply zone. I wouldn't be surprised if it just cut it short by going into this maybe zone. So you see this area of demand pushed higher, price fell right through it, demand flip supply. You can see we kind of I guess, dipped into it a little bit, kind of a mild reaction if you ask me, but I think that's definitely one of the possibilities. Price just comes into this area and then continues lower, never really reaching this area of supply again. But yeah, be aware for anything. But those are the ideas I have right now for Euro USD.
My man.
All right, let's transition Euro GBP. Okay, so we got it at the bottom of the range, right? So this is the basic range, and I like to use the line chart to establish that. It just makes it a little bit easier. The candle closes. That's essentially what the line chart is. And we had this deviation, right? And came right back in. Tested the range high again, deviated, midpoint, range high, and now we're back down to the low, and we just busted this sell side liquidity. So I'm very interested right now in watching price action. Let me get back to the candles, because obviously this candle is live right now, still developing, but what I would like to see is we bust these orders, and if you wanted to take a long right here, that's potentially a good idea, although I don't know if I would trust it. I think if you did take it long, there is maybe a fair chance that you just get a small retracement. Basically what this red arrow is signaling, because a lot of retail traders, they wait for this retest right here, right, of the range, maybe like this area or something, but price usually gets front run, and it's not always that neat. So you usually see these like half-ass rallies, like just a little retracement and then a continuation of this trend down. Short of that, I would want to wait to see price reclaim this range low right here. So again, the other arrow. So basically see price deviate from this sell, or grab that sell side liquidity, deviate from this previous low, and then push higher above the range low, the actual range low, and hopefully get up into bust this buy side liquidity right here and around the midpoint, in which case I might be willing to take a long off of a retracement around this level. I'd have to wait for how price develops, obviously, but still looking for price to attack this area of liquidity. I do like this, and it's consistent with the midpoint, which is generally a good area where price gravitates to. Let me get rid of some of these. Yeah, so that is the basic idea. Obviously, these aren't going to be perfect, but these are the general, this is the bullish case, this is the bearish case, and I'll be looking for how if price is more consistent with one or the other. All right, let's move on. Euro JPY. Okay, so this is kind of a boring one. I almost kind of want to skip it, but I'll talk about it briefly, I suppose. So still in an uptrend. Actually, I'm going to go down to the lower time frame. Yeah, I might just skip over this one. Not too exciting. So we're pretty much range bound right here. We got some buy side liquidity up here that I would be interested in seeing price push above and then maybe continue lower. If not that, then maybe attack this level right here. So something, come down to this level and then just shoot up to attack this level right here. So it's this, especially if we see a range, I would love to see that too. If we see some sort of range build up or continue, and then we expand the range, right? And then continue lower. Or if it's the opposite, you go like this, expand the range, come back down, expand this range, get that sell side liquidity, and then push higher. So that's more or less what I'd be looking out for. But again, this pair right at the moment doesn't necessarily interest me that much. So, focus on it if you will, but I'm going to transition. Euro, Swiss franc. Okay, so we got, let's go to the daily chart. So we are in the general area of this previous range right here, right? So price pushed all the way down because we were operating in this range. And now we broke or establishing a new range, but we're retesting that previous range, which I like. And it is consistent with this area of supply. Let me mark that up so everybody knows. Okay. So as you can see, this supply zone is really, I mean, it's pretty much in line with the previous low right over here. All right, over yonder. And we showed a reaction to it already. Obviously, price still developing, could change. And what's good about this, so we made this high right here, right in supply. And I should go down a little bit more.
That's what she said.
And we had a strong reaction to it, right? Broke this low, and we perfectly broke this low. So this is actually a good example of the sell side liquidity play. Now, if you were watching this, you see, again, this is why I said earlier that you don't usually want to trust the lower time frame one like this. If there's a really close sell side liquidity area to these lower time frame ones, I generally trust the latter. So what happened? Price did perfectly. I mean, look at this, just wicks. So this is a really good example of this kind of strategy. And the idea would basically be you enter right below this level, because the assumption is that price is going to break that level perfectly and then continue high. Now, maybe this high, obviously that's not necessarily always going to happen. If you're in higher time frame supply like this, so you are assuming that price has a maybe better chance of continuing lower going forward, then you maybe don't want to target this high. Oops. Because you are assuming you're not confident that it's going to make a higher high. So in this case, this is why I had this take profit here. And the tricky thing about these strategies is really where you place your stop, because your entry is based off of this. So it's pretty simple. Your take profit can be some area of supply or buy side liquidity, whatever it may be. But your stop is usually up in the air. It's not always clear where you want to put it. Sometimes you'll have a level you can base it off of, but that I found with the strategy is the trickiest part. Generally, I just try to move it to whatever is comfortable. So I like to have at least a 3R trade. So maybe if I need some breathing room, I'll push it down to 3. If it still doesn't look good, I just won't take it. If the risk to reward isn't there, you just shouldn't take the trade, because that's part of having a good trading strategy, is getting that good risk to reward that you want. So for this one, you could base it off of the bottom of the candle, right? So the impulse that led to this sell side liquidity right here. So if you line this up with the bottom of this candle, circle it. So this area right there, and that actually would have been an amazing risk to reward. Given it's 4, almost 5 R, looks kind of tight. I probably would have given this a little bit more room, down to 4, just to make me feel a little bit comfortable, because I hate getting whipsawed out of trades, especially winning ones like this one would have been. But yeah, let's get that out of the way. And so moving forward to current price action, we just went into this lower time frame area of supply. So we were in higher time frame supply, and that's what led to this strong reaction. And then we circled back up, and now we had another, so far, pretty strong reaction to this area right here. Now that's a good sign that we are headed in a lower trend, so I would want to see a lower low be made. And higher time frame possibly attack this area right here of sell side liquidity. So basically, obviously we can have ups and downs going into that, but eventually get down to here. And if we go higher time frame, you have to keep in mind that we still are bearish, right? So we are long trades are technically counter trades. Doesn't mean we can't keep making highs all the way up until this higher time frame supply, because totally possible. Because if you consider this the high and this the low, then why wouldn't we be able to continue this bearish structure and trade all the way up into this higher time frame supply before continuing lower? So I would be on the watch for that. But at the moment, we are in this area of potential higher time frame supply, and we are seeing a reaction. So I think there's a good chance we even get all the way down to this area of sell side liquidity. So high or lower highs, lower lows, all the way down to here, and then a continuation. But yeah, I think that's enough about Euro Swiss franc. Let's keep the ball rolling. GBP USD. Okay, so right now we are in higher time frame supply. I'll have these labeled for some reason. You can even consider this one kind of a supply zone. But we are in here right now, you can see, not seeing a strong reaction, and that usually worries me, because if you have a lot of orders in here, you don't usually need price to consolidate. That's often a sign that it's going to edge higher, maybe push into this level right here, or bust this buy side liquidity all the way towards the top. So I would love to see that. Basically, I might even just put an order straight up right at where, like where people leave their stop losses, right? And if you think that this trend is shifting, which I have been thinking for some time with GBP, because of the blow off bottom, as I call it, which, when you have some major capitulation event like this, just such strong buying, because this is a daily chart. So look at these wicks on a daily chart. It's pretty crazy. So this, as I just said, is kind of like a mass capitulation, which is often indicative of a market bottom. So we're making higher highs, higher lows, obviously still potentially part of this, downtrend. I would say, maybe if we break here, we can really start talking about the full trend shift. But at the same time, it could still be, edging higher and higher over time. But you get a good counter trend opportunity by it taking out this buy side liquidity and then heading lower, maybe around to the midpoint of this kind of range right here. But so I guess in summary, this area I'm not all that convinced about as a supply zone, just because of this reaction. I don't like to see it consolidating. Not to say that we won't just drop straight there, but I think we would have seen a larger reaction if this was a stronger supply zone. So I would be more concerned with watching, or more interested in watching this level, or seeing a deviation kind of attacking that buy side liquidity and then heading lower. And then on the lower time frame, oh, it's too low. Whoa. We have this area of sell side liquidity that I like. So basically this order right here, and I would just be targeting a higher high. So that's why it's perfectly lined up with that. But just looking for price to dip back below this level, bust any stops, fill a little bit of this imbalance. Possible we get all the way down into this area of demand. So all the way down into here. I don't know. I don't think that is my base case. I would probably be looking more for just a dip to bust that sell side liquidity and then edge higher, which is why this order would be here. But obviously totally possible to get all the way down to here. But if it got this far down, I would also maybe be holding out for this level of sell side liquidity. So price coming all the way down into this level, busting all the stops, resting here, grabbing all that liquidity so it can then head higher. But you can try both too. If you lose this one, might as well try this one. But same concept, targeting that higher high. And like I said earlier, figuring out the stops for these can be a little bit more complicated, but this is already a pretty decent risk to reward. So you can keep this stop lined up with this area right here. So price could dip all the way down to fill. This isn't really an imbalance, but we can get all the way down to this area that kind of looks like demand, and you'd be okay. But yeah, those are my general thoughts on GBP USD for now. Let's keep it going to GBP JPY. We'll head to the daily chart. Okay, so we're making new highs right now, right? Swing highs, yearly highs for several years. Yeah, so this is clear uptrend, and which is pretty crazy after this huge daily wick. This again, all these GBP pairs, you're going to see this just because they had that huge liquidation event, with the gilt market. But we are, let's get down to a lower time frame. So we have this range we're trading in right now, right? We just deviated from it. So what I would like to see is a push below, maybe a retest, and then heading down to the low end of this range to get the sell side liquidity, expand the range from down here, and then continue higher. So this order, pretty straightforward. We could, kind of similar to the last one, we have this big gap right here in this area that looks to be demand. Definitely possible we trade all the way down into here. Whoops. this. Come on, TradingView. So definitely possibly just trade into this demand and then continue higher or lower. Who knows? But I would be more interested in watching just busting. Actually, probably move this down a little bit more. This isn't accurate. This level right here, this low. Now it is. This is a 4-hour chart. Let me get down a little bit more. Yeah, so I would like this level. So push this order down a little bit more, and then targeting. I would target, this is kind of the range, so you call this a deviation. Now, if you still think we're going to make a higher high, go ahead and target that higher high. But the risk to reward is already good enough, so it's not necessary. So I'd probably push this down to get to like a 4-hour trade. Pretty decent. But yeah, basic idea, just looking for price to retrace down into here to grab any of that sell side liquidity and then continue higher to this range high again. Because even if it goes lower, oftentimes you see that range high retested and then the continuation. So whatever your longer term, I guess, bias is, like if you think we're going to be headed lower, then maybe don't target the higher high. But it doesn't really matter. The trade will be a good risk to reward regardless. But yeah, so oops. Got a deviation potential trade right here. So I want to see come back down into this range right here, and look for that retest of the range high before going down low, or and then after that, I suppose, because obviously price would have to get all the way down here for this entry, then looking to this level to attack that sell side liquidity. All right, so next one we got GBP and Swiss franc. Okay, so we just basically broke through this buy side liquidity right here and this kind of area of supply, so we busted that high. I do like to see that because we could definitely be headed lower from here to attack this sell side liquidity, which will be clear once I get down to a lower time frame. So we busted that high. Love to see that. So I would be interested in, potentially market ordering from here, but I want to give myself, whoops. Oh, cool. Forgot I had this here. We'll talk about that in a sec. So we got this area of sell side liquidity that I like. Right, these equal levels, relatively equal levels, and this whole thing of imbalance right here, just from all buying, just straight shot up from this demand zone, just straight shot up to establish these relatively equal levels. So a lot of liquidity resting in this region. So and now that we've seen this deviation and busted this buy side liquidity, higher time frame, I would be interested in potentially shorting down to at least this level. So more or less what this order is right here. I'd probably enter, obviously, this is where price is right now, so that's where it'd be entering if you were marketing in. Whoops. And we got, so this is a 5-hour trade, so I would probably just push the stop back as far as you can to remain comfortable. So for me, I'd probably just do like a 4-hour trade, and you could also try to hone in your entry a little bit, getting a little higher. But now that we've seen this deviation above here, it wouldn't surprise me in the least if we just headed right lower, or like straight lower. Now this doesn't fully line up. I suppose, let me see if I can make this bigger to make it more obvious. Let's leave it like this. So I had this here because it's kind of a decent example of these 3 phases that I talked about in the previous video, where you have these consolidations in a relatively tight range, and then you expand the range. So we have this consolidation, we expand the range, and then you come back down here to expand the range to the bottom side. So like this, right? So expand this range, bust it on both sides, and then continue higher. So I would not be surprised if we saw that, and that would again be consistent with this trade idea of taking it short to this area of sell side liquidity, and then we push higher to continue the trend. So that's part of the I guess benefit of focusing on the lower time frame rather than playing a sell all the way down to like here, this area of sell side liquidity, because like both of those strategies, basically this buy side liquidity where you just bust those stops and continue lower, and this kind of contraction, expansion, and then expansion to the bottom side, both those would give me reason to take this short right now. So who knows, maybe want to get off this video, I'll mark it in. But let's transition with that out of the way to USD JPY. right, so let's look at this daily chart. I know it's pretty wild. Okay, so big story with USD/JPY, the yen-tervention, as they call it. The Bank of Japan has a lot of people are speculating if they actually did intervene. Some people say they didn't. Some people say they do because they're seeing their treasury balance decline. And but either way, it doesn't matter. Let's get down a lower time frame. So this was the actual the first yen intervention, at least this year. And then we made it all the way back up after that, so it didn't do jack shit.
Little bitch.
And then we had it all the way back up to this level to we broke 150, which is absolutely wild.
Not crazy.
And now we have been making lower lows since, right? So this was the original low after the suspected intervention, and we made a new low off of that. But we are still showing some strength. Obviously, this is still consistent with this downtrend, so I wouldn't get too excited. I would maybe be looking for a return back into this range, probably busting this area of sell side liquidity, which is consistent with the midpoint of this range, which I talk about a lot. When price deviates from a range, it often returns to the midpoint, basically retesting that range, confirming price is ready to leave that range, continue with its, whatever this range it made after that. And, because it's consistent with this sell side liquidity, I would like to see that. So this entry right here, pretty straightforward. And then a continuation to, at the very least, wherever the area of buy side liquidity, or if there is a supply zone that forms that you like. So as it stands right now, so if we saw a reversal from this point down lower, I might change the take profit to this right here. And I might just keep the stop right there because it's pretty decent. So 3.5 are not a terrible trade. Again, that's if it doesn't move higher. If it does move higher, maybe it gets roughly equal levels with here. You could target this area of buy side liquidity. But right now, I'm not particularly interested. You could be playing off of this area of supply right there. And we're in there right now. So possibly taking a sell from this level, invalidation just at the top of the zone, and targeting a new lower low. This is a good risk to reward. Wouldn't be opposed to it. Seems like a decent trade, so something to keep in mind. But higher time frame, I'd be looking for this level potentially long, because the Bank of Japan, it's a weird amalgamation of those words. The Bank of Japan is continuing with its yield curve control. They are pinning yields at negative, or at least for their 10-year, at positive 25 basis points, which might as well be negative because the real rate is with inflation. And the Federal Reserve is continuing its hawkish stance. They're not showing any signs of slowing down, and I don't think they can. I've heard a lot of people talk about they made a mistake calling inflation transitory, and they won't make the same mistake again. They are more willing to make a different mistake, as in breaking something in the economy, than to pivot away from focusing on inflation because they think it's going to go down, because everyone's talking about the recessionary forces, deflationary forces, or at the very least disinflationary forces that are going to take inflation back down to a more normalized level. But they are not going to do that until they are fucking sure. And that's part of them echoing Volcker's approach, because he is known for tackling inflation, supposedly. I'm not going to get into the actual validity of that claim, but he is accredited with tackling inflation. And he raised rates to, I can't remember what it was the first time, 15% or something, and then lowered it down, and inflation came back with a vengeance. And so he jacked up rates to 20% and then killed it the second time around. But obviously the better approach would have been to just squash it in the beginning by staying at an elevated level of interest rates for a while. And that is the Fed's goal. So they would rather kill inflation at the expense of causing a new problem, in my opinion, than risking not killing inflation because they're worried about a recession. They would rather lead to the recession, kill inflation, and focus on whatever new problem is ahead of them. So it's a long-winded way of saying I think that this trend of USD/JPY going up is probably going to continue, because nothing in the macro picture has really changed.
Totally.
Okay, well, enough of that. So this order right here, definitely be eyeing that, but higher time frame, still think nothing has changed, so I'd be looking for buys around maybe this area. Anyway, let's transition. USD Swiss franc. Get up to the daily chart. Okay, so we have this pretty weird range, pretty big range right here, and we had this deviation and clear departure from it, right? So we deviated from the high, you know, got that buy side liquidity, didn't have any meaningful candle closes, and this is a pretty large, substantial wick pushing price down back into the range. And now the areas I've been watching, I mean, you could be looking for just a retest of this range high and then a continuation to attack this sell side liquidity. But if we get down to a lower time frame, now I don't have that much. That's why I labeled. I don't usually play these with confidence. That's why I have them labeled with question marks. They're called maybe zones, where you see this area demand flipped, potentially supply, because you come back in, you find some strength, and then you just rock it down. So sometimes when that happens, you just see a return into that demand zone, flip supply, and then a continuation of the trend. But I would probably be more interested in seeing price go right up here to attack this buy side liquidity. So actually I can just change this right here. So this is probably what I'd be more interested in watching for this pair. So basically the same thing that it was, but just moving it up to attack this buy side liquidity, not putting all my eggs in this quasi demand flip supply, because I don't necessarily think that's reliable, especially because we traded I guess we're around like equal levels with here. But yeah, you could also say that this is the area of supply to watch, because that was the start of this impulse down to this low. And so yeah, maybe you play the supply zone, you think price is going to go like this, but I would also be very interested in playing the the stop loss play, the buy side liquidity, maybe even just the range high, either or, something around these levels right here in this general region to continue lower. But I would be cautious, just because I think, like I talk about pretty much with every pair, longer term, I think the dollar, when I say longer term, I actually maybe say medium term, but until the Fed changes something about its policy or these other central banks get on board with being as hawkish, I don't understand how the dollar is not going to eventually turn around. Now, obviously I could be wrong, but it just doesn't really make that much sense, because the reasons for driving the dollar higher haven't really changed. I think this is more just an overbought dollar and maybe part of a natural retracement. So maybe looking for buys. So if we attack this sell side liquidity right here, maybe dip into this area of demand and then continue higher, that could definitely be what we see. And that's probably what I would be eyeing right now, especially because it'd be kind of consistent with this midpoint. You get a retracement all the way to the midpoint and then continuation higher. But who knows? So short term, I would be looking for sells, follow the momentum somewhere around this area. But longer term, I'd probably be more interested in checking out a buy, unless something in the the larger economic picture changes.
Yeah.
Okay, let's transition USD CAD. Okay, so this is a good example of the sell side liquidity so far. So I was kind of hoping for more of a deviation, but we got this break right here, so perfectly busted these stops. And obviously we haven't had a huge jump yet, so it's not a big deal, but we had these lows right here, and price perfectly deviated, or just busted the liquidity, busted the stops, and now we're going higher. And I think the move right now, I can just get rid of this, is looking for it to bust these levels, possibly get up into this area of supply, but then continuing lower to a new low temporarily. Again, following this downward momentum of the dollar right now. So I think we can get all the way down to bust this sell side liquidity, kind of consistent with the demand zone. So either way, come into here and then go long. But in the meantime, I would be watching this area right here. Maybe actually let me get this out of the way and then we'll talk about that. So you got this area of supply, right, or this area of buy side liquidity, busting these stops. I think I had it here just because there was more levels. I mean, obviously that one is the highest, but you got levels around here kind of equal. But either way, somewhere in this region, I would be looking for price to turn around, including this supply zone possibly. But areas to go long, I'd probably be more interested in checking out this area right here. And then obviously looking for or targeting a new higher high. And then you can have different take profits as you go, like this area of buy side liquidity, or if it doesn't end up getting all the way up here, this area. But, to each your own, you can take profit periodically. Doesn't really matter. But these are the levels I will be looking out for. All right, with that out of the way, let's transition to our second to last pair, gold. Okay, so daily chart, gold has been on a downtrend largely because of the dollar strength. You denominate gold in other currencies, it's been doing decently well, especially against like euro or yen, but denominated in dollars, it hasn't been doing well because if dollar goes up, things denominated in dollars will struggle to go up themselves. And that's partly that and interest rates rising, which are making treasuries more appealing. So money leaves gold, goes to treasuries. That's partly been what's driving the weakness in gold. And this is, right now we're dipping back into this area of demand, right? So we caught a bid, pushed up a little bit higher, and now we're dipping back into it. I still like this area up here of buy side liquidity, so I would love to see price catch another bid, possibly in like a lower time frame demand zone. So we had this one right here, caught a bid, and basically making a higher high off of somewhere around here. I'll get to it on a lower time frame, but essentially looking for gold to push up to at least this area in here and then heading lower. Now we could get all the way up into this area supply, but I'd probably prefer to just see a little push, maybe even just like a tiny wick above this buy side liquidity level, these levels right there, and then a continuation lower. Again, this is all kind of consistent with the dollar pushing higher eventually, but I still think the momentum right now is to the downside for the dollar, which is why I think gold has room to push up to this level. So let's get down to the lower time frame. So right now we basically equal levels. I can't really tell so close if we busted this sell side liquidity. It looks like it's definitely, could have. God, they look like perfectly equal lows.
Not crazy.
But either way, so this order right here, potentially, basically playing this sell side liquidity. And one reason I like it is because it's the second one. I feel like the second one, or just in my experience, I shouldn't say I feel like, but in my experience, I found that the second one is usually more reliable because you got like getting back to this lower time frame versus higher time frame. Not that these are basically the same time frame, but you see this small retracement, like if you're playing off of this one. And I suppose you could say it's technically the third, but either way, it's kind of a discretionary thing. You'll have to figure it out for yourself, which one suits you. I usually like the ones that have a huge gap to the nearest demand zone. So when you have like this low all the way down to this area, those I find to be more reliable, where you get these pushes just barely beyond and then a continuation possibly up to here. Actually, get rid of this one. Don't really need it. So yeah, that's the general idea. What I'd be looking at for gold short term. This play possibly going all the way up to this area of buy side liquidity around 16,800 or 16,800. That would be nice, right? But 1680. And if you're targeting that, you can have a pretty breathable stop because that's a 6R trade. So you can move down to a 5R trade, get yourself a decent amount of breathing room for it if it filled a little bit more of this imbalance than you expected. Now, I don't like this reaction so far just because it's like perfectly engineered low, so it could be building up even more liquidity, in which case you might want to look for price to come all the way down into this area of demand. But I suppose taking longs in either direction could be good, provided you do think that the dollar is going to continue, taking its foot off the gas for a little bit. Because if the dollar pushes, continues to push higher, it's going to be really hard for gold to push higher because it's denominated in dollars, right? So this could definitely be the start of a newer lower low where we just push below there. But as long as this dollar momentum is to the downside, I would be interested in taking gold long, possibly all the way up to here if we can get there. But yeah, so let's transition to our last pair. We got Bitcoin USD. Let's get daily chart. So we had a pretty sizable rally in, more in Ethereum. And there was like one day where it was up like 10%. Still, you take the higher time for perspective, not exactly something to write home about. But, yeah, so we got, this is part of, really, I would say, more of a retracement, bear market rally, whatever you want to call it. I do like this area of liquidity. Let me get down to the 4-hour chart, maybe more clear. So, right, we got this area of buy-side liquidity that I would love to see Bitcoin attack, push up right there, and then head lower, breaking this level right here. So that would be, look something like this in order form. So target this low, and I'll probably leave it around maybe 3.5. That seems breathable. Bitcoin's not crazy volatile lately, but you never know. That being said, this area of supply does interest me. When you have these big gaps, like I said in the last pair, I usually think, or I find them to be a little bit more reliable. But if the demand zone or supply zone was like right there, I would just play the supply zone rather than this deviation, just because, if any resting liquidity is that close, it just makes sense that price would probably push up to get it. But given this space, I would probably be willing to take the short around here. But I think there still is some room for risk assets to rally in the short term. So if this didn't work, then I would be looking to this area of supply, kind of consistent with this midpoint of the range, and then taking it lower. But who knows when Bitcoin's going to pivot. We could also just target all the way up here to this buy side liquidity. So a push all the way there and then heading lower. But bottom line, I'm looking for shorts at some point in Bitcoin, Ethereum, crypto. Oh, wait, am I on the DXY right now? How the fuck did that happen?
You're a
right,
fucking
well, I guess
idiot.
it's still consistent, though. I'm looking for shorts in the short term for DXY, but longer term, let me get back to Bitcoin. How the hell did that happen? All right, yeah, this makes more sense. So we got, we made this high, right? We busted this buy side. Actually, I'll just copy this. So we busted through this buy side liquidity. We're kind of seeing this deviation. Now, after this deviation, wouldn't be surprised if we just head back below into this range and at least to the midpoint, if not the range low, and get another deviation, maybe even busting this level. But we do have this higher time frame area, actually go to the 4-hour, higher time frame area of supply. Now I'd probably base it off this large green candle all the way up to there. And we're pretty close, so I might just be looking for some sort of sell off at this level. All we need is just like one more really big day where, ETH rallies 10% and Bitcoin rallies like 5 or whatever. So, and then I might just take it down to the midpoint if the risk to reward is good. But I still think longer term, like I was kind of saying earlier when I was stupidly looking at the DXY, that I think Bitcoin is going to make a lower low at some point. Not necessarily that it's going to go super low, but I think it'll at least test this range low one more time. And getting back to one of those previous things I was talking about of the, we get the range, right? You get the expansion to the upside, then an expansion to the downside, and then maybe continue. But right now we have the expansion to the upside. So if we do start heading lower here, maybe then look for the expansion down here and then take it long back to the midpoint range high or higher high, whatever the macro environment is suggesting. But yeah, short of that, this level right here, this area of supply, definitely liking that. Or if we see, look, we're already getting a little bit of a rally, right? So if we see just a push right here to attack this buy side liquidity, run these stops, and then heading lower to attack this sell side liquidity, that would also be kind of consistent with this range that we establish. Maybe if we even get one more and head down here and then expand. So yeah, just keep that in mind. Maybe even tighten this range, base it off of the, oh no, actually I have that range. So something like that. Back to the candles. Yeah, so I would be interested in seeing a push beyond these range, possibly attacking that buy side liquidity, and then heading back down to, you can always target the midpoint, the range low, or in this case, the sell side liquidity down here. But you can see I have this order out. I don't think it's in, but this order right here for a potential just push. Oh my God, this is a messy fucking chart. There we go. So looking for price to come back down here, run these lows, and then push higher. Hopefully you could target this level, but say this is the top right here and then we head lower, I would probably just be targeting this level right here of buy side liquidity. So price pushes up and then you head lower from there. But I think that does it for today, unfortunately. So on that note, as always, stay happy, humble, and most importantly, solvent.
And we say bye-bye.